to Newsmax now. Holiday sales hit a 6-year high this year. Early data says sales, excluding auto sales, rose more than 5% from early November to Christmas Eve compared to the same time last year. People spent more than $850 billion this holiday season. You can buy a lot of border walls for that much money. Meanwhile, the stock market came roaring back today after a dismal Christmas Eve. Still, all of the major indices are off about 7 to 10% for the year. So what's ahead for 2019? Joining us now to talk about 3 key issues every smart investor should have on his or her radar as we look ahead to 2019 is Rich Torrenzano, CEO of the Torrenzano Group and author of the book Digital Assassination. Rich, great to see you again. Merry Christmas and Happy New Year.
Merry Christmas and Happy New Year to you as well, John. Thank you.
All right, here are the 3 key issues we want to make sure smart investors have on their radar, according to Rich Torrenzano, for 2019. First, the Federal Reserve and Fed Chairman Jerome Powell. Talk to us about that in a second. Number 2 is the government shutdown and the Democratic control of the House. And number 3 is the trade war with China. Let's start with the Fed and Jerome Powell. President Trump has feuded publicly with Powell for raising interest rates. And on Christmas Eve, President Trump compared the Fed to a golfer who can't putt. Reading from a tweet here from President Trump, the only problem our economy has is the Fed. They don't have a feel for the market. They don't understand necessary trade wars or strong dollars or even Democrat shutdowns or over borders. The Fed is like a powerful golfer who can't score because he has no touch. And Rich, you agree with the president here. You say Powell has got to go. If the president can't fire him, he should resign.
Well, that's right, John. And I think what we've seen is a decoupling of the economy from the market. We have an underlying economy that's doing very, very well. Corporate earnings continue to be quite high and should continue for the next 3 or 4 quarters between 5 and 8%. We have the highest employment in our lifetime. We have the lowest unemployment in our lifetime. We've seen GDP hovering at around 3%-ish, and I think we could see even 4 or 5% this year if the Fed would back off a little bit. I think that if you look at the downturn in the market, it started with the Fed raising the interest rates in late September. We saw the Fed chairman's remarks in October, and while he was talking, the market went down 700 points. Many of us were yelling at the screen, "Please stop talking." And
I'm sure you were saying it just like that, too.
Well,
right?
That's exactly how I said it, John. And, and then we saw, the most recent interest rates. So that's 4 interest rates hikes this year, and they started talking about 4 for next year, but I think they've backed off now to 2.
Maybe.
And I think it's too much. It's too much tightening too quickly. That's unnecessary when we've seen inflation levels pretty much at the same point for the last 4 years.
I want to play something real quick, Rich, from the president. He was asked about his level of confidence in both the Treasury Secretary and the Fed Chairman. Here's what he had to say.
Yes, I do. Very talented guy, very smart person.
What about the Fed Chairman? Who's the Fed Chairman?
Well, we'll see. They're raising interest rates too fast. That's my opinion, but I certainly have confidence. But I think it'll straighten. They're raising interest rates too fast because they think the economy is so good. But I think that they will get it pretty soon. I really do. I mean, the fact is that the economy is doing so well that they raised interest rates, and that's as a form of safety, in a way.
I think the president was in the Christmas spirit there, obviously holding back a little bit his feelings, the way he really feels about the Fed. But you told me also that Steve Mnuchin called the big banks over the weekend, Rich, to make sure they had enough cash on hand. Tell us why this is a prudent and important step for the Treasury Secretary to take at this type of situation.
Yeah, I think it's a very prudent thing for the Treasury Secretary to make sure we have the necessary liquidity in the marketplace. If you go back to '87 and then the crash that took place in October of '87. I was on the executive and management committee at that time of the New York Stock Exchange, and Jerry Corrigan and the Treasury Secretary at that time made those calls. Now, I'm not comparing it to that time at all, but I think it's very important when the Fed is choking here a little bit, you need to make sure there's enough liquidity in the marketplace and make sure the big banks and other banks as well as the NYSE member firms have the ability to do what they need to do in the trading environment. What the Fed what the Fed has done here is that they believe that because we have a roaring economy, there's going to be high inflation, and we have not seen that now in the last 2 years, and that's a bit of an archaic understanding of how the market is working.
All right, let's do kind of a lightning round on the next two, Rich. We got about a minute and 30 seconds here left. I want to talk about the next two issues. Number two being the government shutdown and Democratic control of the House. You say the refusal of the Democrats to fund the border wall and the promises of endless investigations from Nancy Pelosi is creating even more uncertainty, and you expect a lot more of that uncertainty to come in 2019 with Dems in control of the House. Tell us why.
Markets don't like uncertainty. The shutdown, I don't think, is really having an impact on the marketplace. It has never had an impact on the marketplace. But a Democratic agenda coming out of the House creates more uncertainty, and that does create a problem for the market.
Something that might mitigate all of that, though, is the last issue here, and the most important one. That's the trade war. Rich, you say this is going to be resolved with China in 30 to 60 days, and once that happens, the vast majority of the losses we've seen in the stock market since early fall will be eliminated.
I really think so. I think once we see a trade deal with China, and we're going to see that on the next 30 to 60 days, you know, China. If we export a car to China, they charge us a 25% tariff. That money is going to the Chinese government. If we import a car from China, we charge them a 2.5% tariff. They try to raise that to 40% during the trade talks. And I think that they're now down and issuing, talking about a 15% tariff level. I think the president is trying to turn back several decades of problems and to create an even playing field, a zero-based tariff or close to a zero-based tariff. Very much what he did in Canada and Mexico, and I think a deal will come out as well for Europe. There is a global slowdown, but there's a lot more that the Chinese have to lose. There's pressure on their currency. There's pressure on their marketplace, far less than we have. There's pressure on their economy, and there's a giant buildup of inventory because they can't sell goods because of the tariffs. So I think the Chinese want to come to the table and move quickly. Yep.
The president's going to leverage that. Rich Torrenzano, CEO of the Torrenzano Group. Thanks so much. Merry Christmas and Happy New Year.
Merry Christmas, John. Thank you.
All right, coming up, the national parks are open during the current shutdown, and you can still go to this zoo and see this guy, too. We'll explain why he's so happy about all this when we come back.